What do you make of what we're seeing right now in the futures? We saw the Nasdaq just dip highly, dip into the positive territory just a bit. Also, the S&P in the red just slightly, even after it's kind of moved higher yesterday. What are you making of all this?
Well, I think it's a pretty fragile market. I mean, the entire return this year has been driven by seven stocks in the S&P. When you look at the rest of the market, it's been pretty flat. And so I think that's a sign of a pretty fragile market. And we have, many things to think about in the months ahead. Not only, $1 trillion in U.S. Treasury issuance, but I think we could potentially have a weakening consumer.
All right, so you're speaking of a weakening consumer. I want to talk to you about student loan payments. They're going to restart pretty soon. According to the Fed, the average payment's just about $300 per person. I know you've seen data and stats that it might be even higher, but either way, it's an increase in money that people have to pay out, and student loan payers are like 20 to 30. I mean, there's to 40, 50. It's a big range there. What stocks or what sectors do you see that student loans being repaid having an impact on?
Sure. Well, I'm avoiding consumer discretionary stocks that look expensive right now. I mean, I'm avoiding names like Lululemon or Canadian Goose. Names like that, I think, are going to have face a lot of headwinds in the months ahead. When you think about that weakening consumer and increased, student loan base, I mean, when I look at someone who's, has a bachelor's degree, I mean, their average student loan payment's probably higher than $300 once these payments restart. And like you said, these consumers, it's anywhere from someone who's from 20 to 50 years old. These are the folks that have been spending in this economy, and I think that that's going to be a headwind more broadly for the economy. And those more expensive discretionary stocks could be in trouble.
All right, so it sounds like you're seeing some headwinds. You just called everything fragile. With that in mind, what is your WEX word of the day?
I say energized, and I only say that because we could see some more stats on the energy market later today. We get the rig count, and I think the energy market is something to pay attention to.
So is there any particular part? We had actually our Pippa Stevens here talking about alternative energy. We've seen some movement in the oil markets as well. Is there one part in particular that you think investors should focus on?
Well, I'm still focused on oil and gas. I think that's one area where, in an inflationary situation, I think you should be paying attention to oil and gas. We saw the Saudis, cut production or announce a further production cuts earlier this week. So I think that's going to have an impact on the market.
All right. Any other parts? I mean, oil and gas, obviously it's been kind of volatile. We've seen a big move last year, some headwinds to it this year. Any other parts of the energy market that you think people should look if they're trying to put some money to work?
I still like infrastructure. I mean, if we're going to look at, onshoring and reshoring across the market, I think we have to look at infrastructure, the export of LNG and other products in a market where supply chains are going to be diversified, in the years ahead. I think you want to look at energy infrastructure.
All right. What about a stock pick, Patrick? We love you when you come on. You have some stock picks. Give us your pick.
Yeah, so we talked about the consumer earlier and the potentially weakening consumer and potentially some headwinds for the economy. So I like Diageo. Diageo's in the spirits business. Good dividend, good buyback program, good stewards of capital, and good economy, bad economy. They're in the spirits business, and those products are consumed in both situations. So I think it's attractive. It's been weaker, in this sort of post-COVID normalization environment, inflation pressures. But I think a business like this with free cash flow, pricing power, barriers to entry, and you think about, an inflationary environment. I mean, these are companies that have invested in their inventory for many years. And so I think there's a lot of value there as well.